Hello and welcome to the Hunt quarterly market update for 30 September 2021. My name is Sam Hunt. I'm a director and head of investments at Hunt, and today I'm joined with the independent member of the Hunt Investment Committee, Dr. Steve Garth. How are you, Steve?
Hello, Sam. I'm well. I see, Sam, that you are still in lockdown.
Steve, it's been like Groundhog Day in Victoria and Melbourne. I'm sure it's probably fairly similar to what you've experienced up in Sydney, although you do have some light at the end of the tunnel. What does that mean for markets? What have we seen over this last quarter?
Yeah, Sam. Well, it's funny you use the word Groundhog Day because in a way, for most of the quarter, markets have been in a sort of Groundhog Day where equities and bonds have just gone up day after day after day with very little volatility. If you look at the chart we have here, volatility, that's the purple line down the bottom, it's close to record lows. And you can see the market climbing up, but of course, everything's changed just in the last 2 weeks, and you can see the volatility kicking up a little bit there. More importantly, you can see that markets just come off a little bit. Now, keep this in perspective, Sam. The Australian market's up about 30% over the 12-month period, and even over the quarter, it's still up, but a more modest 1.7%.
So, Steve, obviously things have been fairly steady for a long time, and you've mentioned the last week or two that markets have come off slightly. What's sort of driving that volatility in the last few weeks?
Yeah, here in Australia, Sam, the biggest effects on the market, well, I'm sure the audience have heard of this, it's a drop in the iron ore price and also the fall of a very large Chinese property developer called China Evergrande, which has been in the news a lot. Now, these things are actually closely related. What's happened is the Chinese government has put constraints on property development, and that's why the iron ore price has come down. Now, some of Australia's largest companies, BHP, Rio, Fortescue, their businesses are all based to a large extent around iron ore.
So, Steve, how have markets performed overall, so for the last quarter and 12 months to the end of 30 September?
Yeah, Sam, look, if we look at the 12-month period, you can see, as I mentioned, the Australian market's up by 30%, but so are global markets and so are global real estate investment trusts as well. And in the quarter, we said Australia's fairly modest at 1.7%. International markets are up about 4%. You do see there that the emerging markets are down by 4.5%.
So, Steve, before we do a deep dive on the factors that we focus on at Hunt to pursue higher expected returns for our clients, I'll just do a quick recap on our investment philosophy. Ultimately, we're trying to provide our clients with a greater certainty around the returns that they need to fund their goals and objectives. And we do that by constructing very low-cost, highly diversified portfolios that tilt towards known factors of return. And if we look at those returns, so simplistically, equities have a higher return than bonds or fixed interest for that matter. And the small companies, as defined by market capitalization, have a higher expected return than large companies. And the value companies, as defined by relative price, have a higher expected return than growth companies. So, Steve, with those three premiums, if we're looking at the equity premium, the small cap premium, and the value premium, how's that played out both domestically and in international markets?
So when it comes to the small and value factors, Sam, over the 12-month period, the small companies in Australia, they've performed in line with the overall market. But the value premium there, value stocks have outperformed the overall market by around 10, 11% in Australia. And when we look at the global market, again, small caps, very strong premium over 12 months there. Global small caps have outperformed the general market by about 12%. And global value has outperformed the market by about 2 or 3%. So for a long while, we've had growth stocks doing better than value stocks, but we've certainly seen a turnaround in the last year with value stocks both globally and in Australia, outperforming the broader market.
Thank you. Looks like it was a terrific quarter, and certainly for the 12 months to the end of September, been great returns for all our client portfolios. And thank you all for attending today's presentation. Stay safe, and we look forward to catching up with you in person soon. Cheers.